Hi everybody, it's Peter Schiff. This is Tuesday, October 6, 2009. Well, no sooner did I blog yesterday that the Reserve Bank of Australia might be the first major central bank to raise interest rates, and several hours later they went and did it. They raised rates a quarter point from 3% to 3.25%. Rather than being a negative for the market, the Australian stock market rallied. In fact, every stock market rallied around the world, as did commodity prices. Gold, which I mentioned yesterday, I thought was poised for a major break through 1,000 just yesterday. I said it would happen any day. It happened today. Gold was up $25 an ounce. Silver was up 70 cents. That's after being up 50 cents yesterday. On the back of higher interest rates in Australia, not only did the Australian dollar make a new 52-week high, the Canadian dollar made a new 52-week high. The Japanese yen made a new 52-week high. The dollar index didn't make a new 52-week low because the British pound was slightly down on the day and the euro didn't gain that much strength. And so the dollar index fell, but it didn't make a new low. I think that's coming soon. Imagine the difference. Imagine if America had raised interest rates today. We would have saw a completely different situation, right? Stock prices wouldn't have liked that. They would have fallen. Well, what's the difference? What's going on right now is the world recognizes that the carry trade is on. That America is going to keep supplying the world with cheap dollars that they can use to buy up other assets. And that's what's going on. The Federal Reserve and the government have a very difficult decision. Do they keep interest rates artificially low for an extended period of time in order to put a floor beneath the housing market and prop up the stock market? Or do they defend the dollar? Because keeping interest rates really low means the dollar is going to get trashed. On the other hand, they can raise interest rates to defend the dollar and pull the rug out from under the housing market and cripple the stock market and send the economy into a worse recession. It seems that most people around the world are betting they're not going to do that, that they're going to do the former. And so it's going to be dollar going down, everything else going up. And that's certainly what happened today. Now, of course, more fuel on this fire was supplied by an article that was out last night out of the UK. I linked to that article on my website at Europac.net. I forget the name. Yeah, The Independent wrote the story. And the title of the story is The Demise of the Dollar. And if you haven't read it, go on the Europac.net site and read it, or just Google for The Demise of the Dollar. But basically, what this story is reporting is a supposed secret meetings that have been going on among the oil exporting nations to stop pricing oil in dollars and to price it in something else, maybe in gold or other currencies. Of course, key people have already come out and denied that, which of course is what you would expect whenever even if there's truth to it, the governments are going to deny it right up until they implement it. But people have to understand the significance here, because if the world does move away from pricing oil in dollars, right now everybody anywhere in the world who wants to buy oil, they have to pay for it in US dollars, which means they need dollars if they want oil. That's a big plus for the United States economy, at least our phony economy. And if the dollar is no longer going to be the unit in which oil is traded, that could be the beginning of the dollar losing its reserve currency status, because a lot of dominoes can fall. A lot of other goods are priced in dollars. They may stop. And the dollar, should the dollar be the reserve currency if it's no longer a good for oil purchases? So this could be a very significant event. But what does this mean? We run these huge trade deficits, right? We import all these products from the rest of the world. We don't produce enough to pay for them. We don't export enough to pay for the imports. But we give people dollars. Now, what they can do with these dollars is take them to an oil-producing nation and exchange them for oil. So, in effect, OPEC's oil is like our oil, because people can use our dollars to buy it. Now, of course, whenever they do that, OPEC countries or oil-exporting countries get stuck with a warehouse full of dollars that are depreciating. You look at the enormous amounts of dollar reserves that are building up in the oil exporting nations. And these dollar reserves are depreciating because, of course, they don't have anything to buy with them. They don't need dollars because what are we making? They want to buy the products made in China, made in Japan, made in Germany, just like Americans do. So the fact, though, that the dollar can still buy a barrel of oil means that there's a reason to accumulate dollars because you're also accumulating oil. But if the world moves away from that, which, they will, it's not a question of if, it's only a question of when. Maybe there's no truth to these rumors, right, that we have now. But eventually, there will be a move, and the dollar will no longer be the currency that we use to pay oil, especially if we continue on our current policy course. In fact, if we continue on our current policy course, there's no question. It's an absolute certainty that this will happen, whether it happens right now or 6 months from now or a year from now or 2 years from now, whenever, it's going to happen. But now all of a sudden, we have to live within our means because now we can't just export dollars to a world that can use them for oil. Those dollars are only usable to buy American products. And if we're not producing the products, the world's not going to want them, which means our consumption is going to collapse, which is what's going to happen. The dollar is going to fall, which means prices are going to go through the roof in America, which will rein in our consumption and collapse our GDP. I often joke that right now, you go to Walmart for low prices. If they stop pricing oil in dollars, people going to Walmarts are going to feel like they're going into Saks Fifth Avenue, or Bergdorf Goodman's. Prices are going to be through the roof because the dollar is going to collapse and we won't be able to afford to import all these cheap products. On the other side of the world, prices are going to collapse for other countries whose currencies have gone up. That is what is coming. And it's amazing that, in the U.S., we still don't appreciate that. Sure, the Dow is up over 100 points today. I mean, the traders are watching the dollar going down. They're watching gold going up. And they still think everything is okay. They still think that the U.S. economy is in good shape. And they're all getting excited about this rally. Yeah, you got to buy. The stock market is up. And they don't understand the only reason it's up is because our money is losing value, because the dollar is going down. So stocks are rising to reflect that, but U.S. stocks are going up much more slowly than other stocks. Meanwhile, look at gold stocks. I mean, the Huey Gold Index, HUI, it was up 6-7% today. It's now 15% below its 2008 record high, 15% below. The Dow is 30% below where it was in 2008. So gold stocks have recovered much better than the Dow, despite the fact that they dropped 70% in late 2008 when the Dow only dropped about 50%. I remember people were making fun of me saying, Schiff, you own all these gold stocks and you're even worse off than the people who didn't own gold stocks. That's not the case now. People who own gold stocks are much better off than the people who didn't own gold stocks. And of course, the people who took advantage of the decline in 2008 and who bought even more gold stocks, which is something I did and I encourage people to do, we're in much better shape than the people who just ignored gold and gold stocks the whole time. The key is going to be, when is the weakness in the dollar, strength in commodities, ultimately going to be a big enough headwind on the stock market that it no longer rises? I don't know when that's coming. But I think it's going to be when the dollar really starts to fall more precipitously, when the dollar index is below 70, when gold puts a little bit more distance between here and 1,000, when silver is maybe over 20, maybe oil is challenging $100 a barrel or breaking through it, then I think dollar weakness is going to be very problematic for the stock market, very, very problematic for our bond market. And now it's going to force the Fed and the government to make a decision that they don't want to make, sharply raise interest rates and in the short run cripple the economy and create a much worse crisis than we had before, bankrupt all the companies that they've already bailed out, right, and have to level with the American public, or continue on this reckless monetary policy, keep feeding the carry trade, keep throwing fuel on the inflationary fire, and completely destroy the currency and visit on the American people the fate of hyperinflation, which would be far worse than the disaster they're hoping to avoid by raising rates in the first place. Anyway, that's it for today. I'll be back again tomorrow.